The Apartment Gurus podcast is brought to you by Greenlight Equity Group, an apartment acquisitions and holdings firm co-founded by Carl York and Tate Siemer, host of this show. We offer you the opportunity to be an owner of cash-flowing, wealth-growing apartments without the headaches of being a landlord. These assets are recession-resistant, risk-mitigated, offer significant tax advantages, and are a great alternative to the stock market. Ready to check it out? Go to www.investwithgreenlight.com today to book a personal consultation with Carl or Tate. Again, that's investwithgreenlight.com. We look forward to meeting you. Welcome to The Apartment Gurus, where twice a week, host Tate Siemer brings you deep dive interviews with the wisest gurus in the apartment investing industry. These experts are sure to create game-changing value and inspiration designed to catapult your business to the next level. Be sure to reach out to Tate at www.investwithgreenlight.com for access to his investor portal and Calendly link. And now, here is Tate Siemer and the Apartment Gurus.
Welcome, everybody, back. Another episode of The Apartment Gurus coming at you. Super excited today. I guess lots of kind of updates for you. And I've been promising you guys a solo episode here where I'm going to basically break down some big changes that I'm personally making and going through in my life, my location in the world where I'm going to be base camping from, if you will. I'll tease you guys with that, and a number of changes that we're making internally at Greenlight, some team member additions. I've said this on a couple of episodes, I think, but end of December, going into this new year, I've never been more fired up about a new year, and I'm just so excited and stoked about about what we're doing at Greenlight Equity Group and our portfolio, what we're doing with the podcast here, what we're doing with my mastermind and my coaching. I just feel, remarkably on track, not on track, but remarkably in my purpose right now, which I'll be real with you guys. I turned 50 and this last year in 2023. And it took me 46 years to really start to tap into, locking into a sense of purpose and being, integrated into that. And so side note, I know what it's like to not necessarily know exactly what you're up to and not feel like you're clear about what you're doing. I was there for a few decades, right? And I was an entrepreneur in different businesses, but I have actually a lot of compassion for that situation, because it's the joy of knowing your purpose and being on purpose is immense. And I wish it for everybody. I wish it for all you folks. And I would just say, if you don't necessarily feel like you're 100% there, just keep going and do your best to, for lack of kind of use a cliche, do your best to kind of follow your bliss. And what I mean by that is pay real close attention to whatever you're doing in your professional life and your professional world that lights you up and makes you feel almost like a master at what you're doing. That the chances of that being at least a guidepost to being, to a sense of overall purpose and overall vision, the chances are that's where it is. And it really comes down to knowing what I call your superpowers, knowing what you're really kind of designed to do and what you naturally do the best inside of, in this case, your business and in the investing industry, if you will, and just kind of keep going. A lot of times that's what that's what life requires, is one foot is in front of the other. And sometimes you don't know what the next step's going to be after the one you need to take right now. And it's just about taking that first step. So a little inspiration for you right off the get-go here in this episode. And I'm just spent the last 20 minutes collaborating and consulting work, getting in Jay Bisaga's world, who's my guest today. on the show. And he's just a remarkable story and has a remarkable, like a lot of value to offer you guys in terms of actual resources, like downloadable resources, tools, but also I think you'll find this sense of purpose theme kind of pervasive in this episode. I think Jay really embodies that sort of thing as well. And so Jay, I'm super excited to have you on the show, man. It's been kind of a long time coming. You and I connected. We were just talking, and was it beginning or end of 21?
End of 21.
Yeah, and you mentioned you just cold called me. Somebody mentioned me to you and a mutual colleague, and you cold called me, which to me was like, that's a sign of somebody that's going to be successful anyway. If you're willing to pick up the phone and call somebody you don't know just to kind of get in their world and collaborate and network, that's just an incredible positive sign to begin with. So, but I know we've kind of kept track of each other since then, and I know you've been a listener of the podcast and whatnot. And so, like I said, it's been kind of a long time coming here. We're recording this end of January of 24. So it's been a little over 2 years. And I'm stoked about what you've been able to achieve. You're 30 years old exactly these days, right?
I am indeed. I am in my 30s now.
Yep. So I remember that well. For some reason, turning 30 felt like kind of old to me at the time. Like it was a little bit of a wake up call for me. I remember that. But what's that?
Stuff starts breaking down. Not everything works like it did. A month or.
Yeah. There is some of that. Well, give it another 20 years, and I'll say this: having just turned 50, I am a true believer in there are ways, and they're pretty simple ways of staying young, staying healthy, and staying strong. I won't even go into it. My yoga journey was a huge part of that, but yeah. So, but what you've been able to achieve, and kind of the portfolio you've built, and the business, the brand you've built, and the kind of the level of knowledge that you have and what you have to share with everybody is really remarkable. And I'm really excited to share it with the audience here. So again, welcome, Jay. Super glad to have you.
And thank you so much, Tate. It's a blessing to be on here.
Yeah, for me too. So let's kind of start, maybe around that 2021 period, when you were reaching out, networking, learning from whoever you could, being bold. Like that's bold action steps right there. Just, cold calling people in the industry that you feel like you can learn from. And let's start there. And I guess maybe to set a little bit of context for the listeners, Jay is an engineer by trade. He's still in his W-2 career as what kind of engineer are you, Jay?
Software engineer. So if you're some other kind of engineer, you probably would not say that I'm a real engineer, but
yeah, got it. But yeah, so I want to hear about the kind of the details and intricacies of being a focused, high level entrepreneur in the multifamily space, how you balance that with your W-2. And we'll get into all that, but let's step back a couple of years and just kind of let's catch up on how you kind of got to where you are today, and we'll go from there.
Definitely. So rewinding the clock a couple of years, you and I, Tate, met at a very kind of a crossroads time in my life, because when we talked, when I cold called you and said the worst thing you can do is just not pick up, or pick up and then immediately hang up. So like, what do I have to lose? At that point, I was out of money. I decided early at the beginning of 21, I was like, I've thought about real estate investing for a long time. I'm tired of thinking. I'm tired of saying I'm going to do X, Y, Z. I'm going to take action. So without really doing that much research, I bought 6 units that year, a couple individual deals. And I had just closed on my one and only flip.
Is that still the only flip you've ever done?
Yeah. In the classical flip, single family, get it in, get it out kind of thing. That's the only one I've done, and I kind of plan to keep it that way. Story for another time.
Good, man. No, I that's actually, to me, that's a takeaway right there. Like, I don't hide my bias against the single family model. We did it. I know it very well. We did it for 7 years, hard and heavy, and did nothing other than single family flipping essentially. And, I could do a whole solo episodes on the ins and outs of that. And, why we're in multifamily now, and so happy to be here. But yeah, keep going, man. So 6 units, right at that point until end of 21.
Yeah, and I kind of hit my ceiling, right? I hit my ceiling for not only the money that I had on hand, the capital I had on hand, but also for the expertise that I had on hand. At that point, I was doing basically everything myself. Jay's going to figure out how to do it and, do it himself, get it out the mud, all that stuff.
Solopreneur model.
Yeah. Exact solopreneur, except kind of not that good. Kind of like solopreneur, but without willing to collaborate with other people. And so you and I met at that crossroads where I was putting less emphasis on my software engineering career because I had just recently, I still have a software engineering career, but I just recently left a job where I was I got to be honest, I love the job and I love the people, but I had to leave it because it was the purpose thing you talk about. And it was purpose, it was values. They were just doing unethical things with money. And I found out about it and I was like, I don't think I can be a part of this anymore. So, in a sense, that was the most prestigious software type tech job that I've ever had. And going to anywhere else would have been not exactly a step down, but just a different step. So I was at that crossroads where I've hit my ceiling in a bunch of different areas. And I was like, I want to do bigger deals eventually. Cause Brandon Turner's podcast, everybody knows.
Yeah. So Beardy Brandon. Yeah. Bigger pockets guru, not with bigger pockets anymore, but yeah, Brandon's an icon in the space. Yeah.
He is. And he wrote the first book that I ever read on real estate investing. So big ups to Brandon.
Which book was it? That put you on the spot. Don't worry about it.
You're good. It was the, what's that?
He's got a few. So
he does. Yeah. It was the entry level book, the most entry level real estate investing book you could find.
Got it. Yeah.
Anyway, I saw him on a podcast. I saw a video of him where he talked about like, what would I say to my younger self? Like if I could go back 10 years, 20 years, what would I say to the guy? What he said was, I would not limit myself by only having to do small deals.
No. Okay. Yeah.
And because that was his limiting mindset, right? He was like, I got to do X, Y, Z. I gotta grind for so many years, so many decades before I can be what I eventually want to be. And he said he would just say, no, do bigger deals earlier. Like don't limit yourself. And I saw that. I was like, okay, I can get on board with that.
Yeah.
Problem, of course, being, I don't know what I'm doing. I don't know anything about commercial multifamily, which is what I wanted to do, frankly, from the start. And I just finally got the fuel in the tank to go do it. So I start calling people. I asked our mutual colleague, like you mentioned, just asked, hey, I want to do multifamily. Who do you know that I can talk to? And so I called you. And honestly, Tate, I want your listeners to know that you were so generous with your time, and I would not be here just sitting here talking to you. I wouldn't be in the place I am if not for the 20 minutes that you gave me that day. And that's honestly, that's what it's all about, is just, being a go-giver, giving more to people without expecting anything in return. I had nothing to offer you, Tate, nothing, but you were so generous with your time, and man, I can't thank you enough for that. Seriously.
Dude, I feel that right in my heart, bro. I really do. And that means a lot. We were kind of talking a little bit about this before we started recording. It's just anytime I get to play the role of being a contributor, at any kind of, especially a higher level, when you're talking about like career direction and like next steps and strategy. And, it's just a tremendous honor. I see it as a big responsibility too. And, to be delivering hopefully really good, smart, actionable stuff. But I totally appreciate that the feedback, and it's so cool to kind of come full circle on that and have you on the show as a featured guest and get to learn from you, really.
Absolutely, man. And it's been one of my goals and one of my dreams to be on this show. So now we're here.
That's awesome. Yeah, that's awesome, man. Tons of meaning in that for me. I really appreciate it.
Yeah, of course. Do you remember, now I'm going to put you on the spot. Do you remember what you told me when we talked, what you told me to do?
I can kind of guess at what I might have been thinking at that point, but go ahead, tell me.
So what you said to me was, I need to put myself in the right rooms. I need to get in the right rooms with the right people and be willing to even put down money in order to accomplish that.
Yeah.
And I had never heard anybody give me that advice before. So it kind of made me think like, okay, how much value am I really going to get out of doing that, out of finding a mentorship group or a mastermind that's paid and not super cheap either. It's a substantial investment. So you recommended I look into a few. I ended up going with Jake and Gino. I love Jake and Gino. I will endorse them every chance I get.
Yeah, they're great. They're great. Yeah.
And even if for no other reason, like the education's great. They got a huge focus on education, but just for the network alone, just for getting around other people that are like-minded, that are doing big deals, where I can show up in a room and say, I want to be like all of you people when I grow up.
100%. Yeah. I can't think of a more instant way to elevate your game and your mindset and your possibility set than like you say, getting into the right room with people that are doing what you want to do. And there's no mistake that I said, make sure it's a paid environment, because everybody at that point has skin in the game, and everybody's there with purpose and not an agenda per se, but like more of like a, everybody's there to get stuff done, get deals done, build their network, build their partnerships. And Gino, I think, has been on the show maybe just once. It's been a bit since he and I connected. Love Gino. I don't know Jake as well, but Gino's just, heart-centered guy, doing it for the right reasons. And those guys are big hitters. And I've been to their conference, I think just one time in Orlando, but that was a great connection for you at that point, huh?
Absolutely. And they really got the two essential ingredients, is like you said, the heart, and just also the experience, the legitimacy to know. The reason I chose them in the first place is because, and this will kind of segue us into what I eventually ended up doing, the track that I wanted to take. But I realized that I don't like doing asset management.
Yeah.
Not something I enjoy doing. I know that because I did it for my single family, and I didn't do a very good job. It wasn't, obviously you got learning lessons, you can improve. And if you have to manage assets, obviously you do. But I thought to myself, like, I want to get around people who that's their priority one, is to do management, to do operations.
Mm-hmm.
That's the bulk of the people you meet in Jake and Gina. You find some other syndicators, other people who are really, really into capital raising, some folks that really just do underwriting, but a lot of them are very heavy on operations. And that just speaks to me, because it's like a bunch of matches made in heaven. It's so good.
Yeah. Yeah, dude, like, it's powerful stuff. And what you're really hitting on here is a theme that we talk about fairly often, which is, again, knowing your superpowers, knowing your natural ability, like a strategic coach, they call it your unique ability, and doubling down on that and outsourcing the stuff that you're not good at, and just like going into power mode, right? And just being what you're good at.
Yes.
Yeah.
Exactly. And what I realized through that that experience of being in this mastermind with these really, really high level people is I realized what I want to do and what I like doing and what I can do. And it's talking to people, it's raising capital. I had never raised any capital at that point, but I knew that's what I wanted to do. And so that being an environment for that just turned out to be perfect. And I'll be honest with you, from the time I joined, so this was beginning of 2022, I pulled the trigger. I didn't do a single deal for another year, which for a newbie in a new space is first couple months, you're like, all right, well, that's expected, right? You're not going to start doing something new right away. By the end of that year, you're starting to wonder, like, am I getting imposter syndrome now? Like, am I really supposed to be here?
Yeah.
But to spend that 12 months learning and networking with people was so powerful for, the deal I eventually got into. So I can move right into that if you want to.
Yeah, well, yeah, I do. I'm eager to hear about. I think there's some good stuff to look at with your first deal experience, but just to kind of speak to your observation about it taking a year. As a one-on-one coach, where I'm taking somebody and starting kind of from square one, usually with coming up with the company brand, the name, the even the logo, the landing page, your CRM integration, your auto drip email campaigns, like building all that stuff, and then building your broker relations if that's the way you're going about business, which is the model that I definitely preach, is sourcing deals through brokers. That's all we do at Greenlight. Building those relationships. Building the capital relationships. Like, honestly, I think really, to be realistic, a year is about what it takes. And I'm all about go, go, go. Like, when I started with my mentor, Corey Peterson, I remember him saying, you're probably about a year out from your first deal. And I was like, that's not what I want to hear, dude. Like, let's talk 4 or 6 months. Like, let's get that first deal done. And I can't remember exactly. I think we did a couple small 20, 12 unit type deals. But I think our large scale first deal really did come about a year later. And I like what you said about imposter syndrome too, because everybody has that. Honestly, everybody, like every speaker you've ever seen on stage, every podcast host, every coach, like, imposter syndrome is real and it's normal. And so anytime anybody feels that way out there, like, just know that you're in good company. But most importantly, you just kept going, right? Like, you might have felt that way a little bit, but like, you just kept going and doing your thing, and kind of probably followed Jake and Gino's lead and their some of their systems and processes, and just made it happen.
Yeah, you keep going, but you make adjustments. One of the big things I was running into was just not getting soft commits, because what I ended up doing is I want to raise capital. So to do that, obviously you want to have capital on hand before you need it. I was just having a lot of trouble finding folks who were even open to the possibility of doing a deal with me. Okay. And I was feeling kind of down on myself one time, like it was like November, I think, maybe December. And I called up a guy who I'd known for a while, who was a very, very experienced guy. And I was just complaining to him, and he was like, okay, so just question. Did you reach out to everybody on your LinkedIn list? Like, did you ask everybody, or did you just ask a few people? I was like, yeah, absolutely busted. I was like, no, I didn't do it. He's like, cool, go do that. Don't complain to me until you've done that, and then come back and complain to me. I was like, all right. And that was what it took, was defeating, because imposter syndrome is so normal, but a lot of this stuff is based on fear. For me, it was fear of, like, I want to raise capital, but I don't actually want to learn how to sell anything. And that was something that really limited me. So that put me in a position to where I could approach an operator with a deal that I loved and say, hey, let's get on board and let's do this.
Yeah. And what you were trying to do at that point with, getting soft commits, getting, interested investors that you can feel like you can kind of count on going into your first opportunity, like, that's some of the hardest, heaviest, like, groundbreaking work that you can really take on at that point in your career, because you don't have proof of concept yet in terms of your own personal track record. Now, I always recommend leveraging other people's track records, getting the right partners in your team model, if you will. Like, for us, it was Corey Peterson and his wife, Shelly, were essentially advisory partners in our credibility kit. And so we were able to kind of leverage their track record and their expertise. And I think there's really great ways of doing that. But still, what you're presenting, number one, is new to you, right? It's a new pitch for you. And you're doing so with not maybe a whole lot of real results to be able to show. You're kind of pitching the concept more than you are your track record. So that's tremendous work that you did getting out of the gate there. So yeah, kind of talk about a little bit about that first deal and how it came about and challenges you faced and how you got it done.
Yeah. So at the point where I was confident enough to say, okay, I can really add some value with the capital I can raise, and I can start pitching myself as an investor relations manager, coordinator, whatever you want to call it, doing investor relations, yep. Being the go-between between the operator and the investors. Yep. I started saying, okay, well, I can't just do any deal. Like, I got to get a really good buy box. Gino calls it the buy right box. It's, yep. Different names, but yep. Being very clear on what I wanted, even though I hadn't ever bought a deal of, above a couple units at a time, that helped me hyper focus on, okay, who is it that I'm looking for? So I started reaching out to folks in Jake and Gino and saying, hey, I love deals in the Midwest. I love the cash flow of deals in the Midwest, and I want to get in on something that's cash flowing, doesn't have to be stabilized, but I should be able to get, a long-term debt on it. And yep. having that buy right box really helped me connect with the person who became the KP on my first deal, Wakefield Lee. Wakefield is out he's in Los Angeles, and I connected with him through a guy that had known him, like, they practically grew up together, but his friend Leon is in Jake and Gino. And so he introduced me, and we talked, said, hey, we're really aligned to the stuff that we want for ourselves and for our investors. Yeah. From there, it was just a matter of him saying, hey, I've got a deal. Look at this. It's funny. This deal in particular that we ended up closing on, it's a 76 unit portfolio in Cincinnati, Northwest Cincinnati, which I think you're from.
Hometown, baby. Cincinnati. Yeah, that's where I'm from. That's where I grew up. Many of you know I moved to Utah in '99 from Cincinnati, but went to college in Ohio. Yep. It's a great yep. market. And I think it's a market that everybody right now in 2024 should have their eyes on. Yeah,
excellent market. And Wakefield is a guy who's been there for 8 or 9 years at this point. So we're talking about somebody who knows the market, who has what you just talked about, the broker relationships. Broker relationships are so huge. And he said, I didn't think I'd get this. I didn't think I'd get this under contract. Here's what happened. His broker relationship was such that he gave like the 4th highest offer on this set of 2 apartment communities. And the broker persuaded the seller to take our offer because he knew that Wakefield could close. That's really the strength. And it's crazy to think about, but brokers are people too. They want to put on the table. They want to work with people they like, and they want to close deals.
Yeah. And sellers are in the same boat. I mean, they don't want to go under contract for 2-3 months with somebody that doesn't end up closing, right? So certainty of closing is huge. And in building broker relationships, like there's ways of strategically positioning yourself to project a high level of certainty of closing. Guys, hit me up. I'm happy to jump on a call with you for 10-15 minutes and we can go over some of this stuff. But it sounds like Wakefield had kind of cracked that code at that point.
Absolutely. Yeah. He, it put him in a position to where he could, show me this great deal. And so I looked at the underwriting for it. I was like, I love this, assuming everything is what we think it is during due diligence, I would love to be on board. I said, okay, when's the next time you're going to be in Cincinnati? He was like, actually, I'm there until Tuesday. This is a Saturday.
Yeah.
It's like, cool. I'm just going to drive up from Nashville tomorrow, and then I'll just meet you there on Monday. So that's what I did. We met there, we saw the properties, and we started talking about how I could get involved potentially. And this is really where this is one of the hardest things for any of your listeners that are new operators, new syndicators, just new
Capital
people,
raisers. Yeah. Yeah.
new entrepreneurs in this space
Yeah.
is getting on board a great team and actually adding value to that team.
100%. Yep.
So this was my assignment, right? To figure out how I can add value to this team. Because, I like Wakefield. Wakefield likes me, but we need a team that can actually execute and everybody's actually bringing value to the table. So I started talking to him. He said, okay, well, investor relations, it would be nice to have somebody, but with the number of partners we're looking at having, I don't actually know if we can just allocate a full-time position to that, even if you can raise capital. So I said, okay, let's tease this out a little more. I end up getting out of him that there is about, 100K, let's say roughly, in at-risk money. So, when you put something in a contract, you got we had our money that we needed to lock up the loan rate, Freddie SBL loan, excellent financing. Yep. And the earnest money as well. So he said, we got to get this from a few different partners. And that's where I saw that. I was like, this is where I can use an unfair advantage or maybe just, front load my risk, so to speak.
Yeah.
We went away and I scheduled a meeting for him the next day. I went to my bank and I said, okay, hey, I need you to print me some checks. And the bank said, how many checks do you want? I said, well, I only really need one. And so they looked at me kind of, I was like, all right. And so they printed me like the smallest book they could get. I took that check. I got on this call with Wakefield. I said, hey, Wakefield, how much do you need in at-risk money right now? He said, I just reviewed the numbers. It's about $75,000. I said, great. I took the check with him watching. I wrote $75,000 on it. Wakefield Lee. I put it up to the camera. I said, look, this is yours if you say I can be on this team, because I believe in this deal. I love the team. I love your third-party management, and I want to attach myself to this business, and I want to get in on it. And so he said, that sounds great. And so I ended up putting down all that at-risk money.
That's awesome. What a great story, and what just high level of creativity. I love the visual of you actually writing the check and showing it to him. I mean, that really kind of drives that home, I think, for him. And yeah, I mean, it being an earnest money or at-risk money investor in a deal is a great way of getting your foot in the door. It usually means that you have a GP position in the deal, and you're rolling at that point because you're in all the meetings, all the asset management, property management meetings. You're in all the email chains, and so at that point you've cracked the code. Like you've broken the law of the first deal that Michael Blunt talks about. You got that done, and you have that much more credibility, that much more confidence, that many more resources at that point. Because anytime you do deals, you have to go out and find resources. And so you establish those and you take that to your next deal. Man, what a genius move, dude. That's awesome.
Yeah, I mean, talk about the visual aspect of it. The fact is, I'm kind of a drama queen, and I was going to make this somewhat theatrical no matter how I did it.
I love it, man. That's awesome. That's so funny. Cool. So let's fast forward a bit. So talk about kind of what you've done since that first deal. What you've done in terms of like kind of the whole business model. So your Ursa Capital, by the way, listeners, check that out online. It's URSA Capital. I'm right on that, right? What's your domain? I don't have that right in front of me here. The
Ursa, like the bear, like the big bear in the sky, capital.com, the hyphens.
There you go. Okay. So talk a little bit about Ursa, what you've been doing, what you're currently doing, and kind of what your vision is.
Yeah. So I'll break that up into a couple different parts. Really the first thing being, what have I been doing since then? So we closed on this deal in June, right? And we started off
June of 22.
Yeah. Sorry, June of 23. So this is
Okay,
pretty
June of 23. Got it. Yeah. Okay. Yeah.
And we, immediately started implementing our business plan. And, I've really not been in a rush to get in on a ton of deals all the time. Like I think you were saying to me before the episode, this is such an exciting time, like going into this next year. And I absolutely feel the same. I only want to do deals that pencil. So
so important right now, guys, like especially raising capital for deals is 3 times as hard as it was a year ago. So you got to do good deals, 100%.
Yeah, an excellent segue, because that's really what I spend most of my time on now is outreach to new investors. Having this deal where I can talk about what we're doing, being able to say that, we're 6-7 months into the deal and we're outperforming year one pro forma is huge. And just having that be, boost the credibility, establish a track record, and be really proactive about reaching out to investors. So I do a lot of, honestly, I do a lot of outbound outreach on LinkedIn. I'm mostly LinkedIn. If you want to connect with me, that is the best place to find me.
So guys, Jay Bisaga, Bisaga on LinkedIn, definitely worth a follow and a connection, 100%. And by the way, LinkedIn is a gold mine for raising capital. I don't care what anybody says. Like, it's a gold mine for a lot of things, but I mean, you can actually you can make some pretty big strides on LinkedIn. Unlike say any other social media platform for that matter.
Yeah. And it's really, I mean, it's the most, it's, talk about using unfair advantages. You have a huge advantage if you're a writer, or even if you're not a writer and you just start writing and just put stuff out into the ether and improve your craft that way. If you're not doing what 90, 95, 99% of people on LinkedIn are posting about, then you stand out. And it's big. And you want to obviously observe trends. You want to observe things that's going to make you perform better. But it's huge. I can't stop talking about how much I love LinkedIn. I'm on there all the time.
Yeah, I heard Gary Vaynerchuk say it's been a minute, but he talks about LinkedIn being like Facebook was 12, 13 years ago. It's just fertile ground. No, very little in the way of ads, high level of participation, and easy to grow your connections and your followers, unlike Instagram, and which is very hard in my opinion to grow. So LinkedIn is great, guys. You got to be on there.
Absolutely. And he would know. He was one of the first to do it, to take off on there. So that's really what I spend a lot of my time doing right now, is just making sure that I'm establishing great deal flow with other operators on deals that pencil and having capital. It's like, alluding to Michael Blanc again, you find deals and you find dollars. Those are the two hardest things to find.
That's it. And that's the business. I mean, you mentioned operations earlier, but as far as executing deals, finding dollars, that's really what it is. And there's like 3 kind of big things I want to hit on here before we wrap it up. And I hate that we're kind of bumping up against time a little bit, but first of all, just talk about your buy box now. Like what, you talked about connecting with other operators and looking for deals. Like, talk a little bit about that, if you would.
Sure. So buy box hasn't changed a whole lot since I was looking for that first Cincy deal. Mm-hmm. I'm looking for something optimally that'll perform at a 1.25 DSCR. I'm looking for something that cash flows from day one, because that's the big brand thing for me.
That's huge. And not only that, but like that, if you don't have that right now, it's really hard to get LPs on board.
Oh yeah. And I mean, it's, being able to differentiate yourself. And there are a lot of, I'm not throwing shade at all on operators that are like their deals are in trouble. It's the way things go sometimes, but being able to differentiate yourself from that and saying, no, look, this is how my deal is doing right now. And this is for deals like this in the future. We're outperforming because we were actually conservative. This isn't just scare quotes conservative underwriting. Have you ever heard somebody say that the underwriting is not conservative? Have you ever?
Yeah. We underwrote this deal. We weren't very conservative about it, but it pencils really well. No, you don't ever hear that.
Pass on this one, really. Just
Yeah. Well, and when you were, 2022 was, or I'm sorry, 2023, leading up to this month, first month of 2024 was, tumultuous is one word. Like, the debt, everybody knows what happened in the debt space as far as quadrupling, if not more, on interest rates, which, had a seismic effect on the equity space and on the LP mentality. A lot of people's deals are not performing, for a number of reasons. People they're getting stuck in bad loans that they can't refi out of, they can't really sell out of. So you got LPs that are having bad experiences that don't want to re-up in the space. So, we at Greenlight, we closed on 3 deals in 2023. And to be honest with you, we pretty much shoot for a deal a quarter, but I'm pretty proud of us getting the deals done that we got done, mainly because they required like everything we had in the way of resourcefulness and diligence and tenacity. So
they're the kind of deals probably that you can look back on a few years from now and say like, man, 2023 was wild, but these are the deals we did and I'm not regretting it.
Yeah, 100%. Yeah. And like so many people have said, if you can do this business right now in this climate, with debt being where it is, equity being where it is, the asset values being where they are, like that, you will shine in future years in this space for sure. Jay, talk a little bit. You talk about what you have to offer passive investors. Talk about your tool. It's super innovative, guys. You got to check this out. I've never seen anything like it. So yeah, tell us about your calculator.
Yeah, absolutely. So I built a program. Remember, I said I was a software engineer. I'm able to leverage that to just build stuff, which I love building stuff. So what I built was something that my hope is that it helps people get over the analysis paralysis. I really think there are 2 things that help drive past analysis paralysis or just sitting on the sidelines, not knowing what I'm going to do, is visualization, number 1, and finding a most important next step. So those are the two things, especially visualization, that I wanted to bring into this product. And it really came about because I was like, how much money, like if you were to just invest in a passive real estate deal every single year and just reinvest the proceeds every time a deal came, it closed, you get the disposition, you roll the proceeds into another deal and just let the machine run itself. I completely ripped off Jake and Gino because they call that the conveyor belt. I call what I'm talking about the conveyor belt wealth simulator. That's where this came from. So it literally it's a simple, stupid question. How much money do you want to make in 20 years by being consistent and investing every year? And you don't even have to invest after the first 5 years, but you want to get that motor running with really average 5-year hold periods. I mean, that's the framework, and the calculator is just there to show you what's possible and stack it against, either more conventional investing or other types of cash flowing businesses. I try to make it as flexible as possible. And it's such an excellent tool to visualize what your future can be. So go check it out. Conveyorbeltwealth.com. Just like, a conveyor belt and then the word wealth. Yeah. I would love to hear what it does for you and even get feedback on it. We're still pretty new product here.
Yeah, that's awesome. It's super innovative and creative and adding a lot of value. And you mentioned the power of visualization, man. That's something we could talk at length about. The chances of you getting to where you want to get are so much higher when you, number 1, know where that is, and number 2, visualize it happening. It's huge. And what this tool offers is kind of a how-to, if you will. It sounds like, you invest this much, this is what you can expect. And you mentioned the 5-year hold period. Like that's pretty much what you see out there in the syndication space. You'll see 3 to 7-year holds. We, at Greenlight, we want to target like a 2x equity multiple over a 5-year period. So, if you invest 100, ideally you're getting back that 100 and then another 100 at closing, simply put. So, that's awesome. And then, yeah.
Sorry to interrupt you. You know what the best part is? 'Cause you mentioned equity multiple. I made this so that you can tweak the parameters. So let's say you're investing in one of Tate's deals. You're not going to be satisfied with the normal 1.8 times equity multiple that the calculator gives you. No, you're going to bump that up to a 2 times equity multiple because I'm investing with Tate. So it's completely configurable. You can play around with that.
Yeah, that's so smart, man. And then the other high level tangible asset value that you have out there is your book. Yeah, I definitely want to hear a little bit about that too. So talk about your book.
Absolutely. So I wrote a book called The Minimalist Guide to Multifamily Investing because I think that, well, I'm aiming for slightly more detail than a crayon drawing. A great investor once said, don't invest in anything you can't describe with a crayon drawing. I want a little more detail than that, but I want something that's minimal, that adds a lot of value, and does a minimum of pitching. Because there are a lot of books that folks write out there that maybe add a lot of value, but it's also a huge pitch. I want to provide value first, Tate, like you did for me, and put that out in the world, make sure that you can read it in under, let's say, an hour and a half if you're a slow reader. If you're a really fast reader, you could definitely read it in under an hour. Called The Minimalist Guide to Multifamily Investing. I love it. I'm very happy with it, and I hope it provides you a lot of value. You can find it at my website, ursa-capital.com/book.
Yeah.
So website/book.
Yeah. And we'll link all of this stuff. We'll link the calculator. We'll link the book. We'll link your LinkedIn profile in the show notes. One takeaway here for me that you just, are such an embodiment of is, and listeners, this should be big for you, is the level of value that you've created at this point in your career with, let's face it, like, the amount of deals that you've done, transactions that you've done. There's a lot of people out there that have done a lot more than you and have not lifted a finger when it comes to giving back and when it comes to creating unique value and unique resources in this space. And to me, you're like an example that makes there's no excuses for not being a thought leader in this space, no matter how much experience you have. And your stuff's high level, man. It's not just like a kind of a cookie cutter checklist on how to invest in multifamily. It's like it's thinking through things that are at a really unique perspective, from a unique perspective, and offering a new look at stuff. Congratulations, man. I'm super proud of you. Like, to think that I had some sort of role in this, I can't help but be a little bit proud. And, I've got 20 years on you in age, and I just love the fact that, you've been able to do what you've done. And you're again, there's that sense of purpose with you. I think that you can just kind of sense when you talk about what you're doing, why you're doing it, kind of like the intention that you put behind all of the choices you've made, the relationships you build, the way the way you sought out Wakefield and got that first deal with him and got that first deal done with him. Okay, so one last question here, Jay. What's next for you? Like, if you could wave a magic wand and have 2024 go the way that you want it to go, what's that look like?
Yeah. So if I could wave a magic wand, it would be one deal a quarter, because that's about the optimal growth that I would like to have. And obviously, having enough capital come in where I can do one deal a quarter. I think this is really all to foster the future goal of $50 million in assets under management. That's that's kind of my North Star, that, and the fact that it's really big for my wife and I. We want to get to the point where we're just giving the vast majority of our income away. So if you believe in putting stuff out there and having that come back to you, like, this is what I'm putting out there. Passive investors, invest with me so I can make my dreams come true of giving money away. Oh man,
that's powerful, dude. Yeah, super powerful. And quick mention, you mentioned your wife. You guys are due for your first child in May, coming up here in 2024.
I'm terrified.
Yeah, dude, many listeners know, I never went there, and I've never been married, never had kids, and I love my life, I love my lifestyle, but I also know that there are things that I'll never experience that you're going to get to experience here in 5 months, and what a blessing, man. I'm super excited for you guys.
Thank you so much.
Yeah. Any kind of final thoughts just to round things out here, Jay?
I think it's just if you had to sum up a lot of what we talked about, it's really just about, two things: is purpose and action. And I think both of those kind of are encompassed by vision. So if we were going to talk in the most general senses, I think that would be just what I wanted to leave listeners with is, for sure that there are no excuses, but really the power that comes behind having purpose, having something that animates you, and just being absolutely relentless. That is something that I aspire to. So Tate, thank you so much for having me on the show. Very happy.
Dude, this was awesome. I love this episode. Guys, listeners, I hope you did too. And this might be one you want to go back and listen to again. And because I think there's a lot of energy in this episode, a lot of inspiration. The digital mentorship thing is real. And so to get to spend, 45, 50 minutes with Jay and me and us jamming and, hearing from Jay, what's important to him, how he's gotten to where he's gotten, like that's gold, guys. So, again, just a huge honor, Jay, to get to be in your space, and listeners, a huge honor to get to bring you people like Jay and get, the wisdom of a 30-year-old that's just been out there hitting it hard and doing things with intention and purpose and focus and like you said, just resilience and tenacity. Like it's all there with you, Jay. It's authentic. Like it's you can hear it in your voice. So, dude, I can't wait to see what you do next. See how this year works out for you. We're right up the road in Columbus. We have 6 properties up there. So, we need to get in each other's world a lot more than we've been here recently. So,
let's set a note to follow up about that for sure.
Yeah, you bet. Love it. So Jay, thanks again, man. Huge stuff. Listeners, thank you. Hope this one hit home for you like it did for me. If it did, hook up with Jay on LinkedIn. There's a great first action step. Download his book, download the calculator, and give him some feedback, give him some love, and he'll give it right back to you. So, and as will I. Anytime you guys want to reach out, I'm here. So, on that, thank you, Jay. Thank you, listeners. We will see you on the next episode. Take care, everybody.
This has been the Apartment Gurus with Tate Siemer. If you enjoyed this episode, be sure to subscribe and leave a rating and review on your favorite podcast platform. To contact Tate, go to www.investwithgreenlight.com for access to his investor portal and Calendly link. He loves to hear from you and thanks you for being a valued listener. Just a reminder that you are the guru. See you on the next episode of the Apartment Gurus.